with traditional financing off the table.
Yeah.
The cannabis industry has seen this surge in creative financing solutions.
Yeah.
And the guide starts with private equity and venture capital.
Which seems like the big players.
Yeah, the big money.
Yeah, when it comes to securing those large-scale investments.
Yeah, especially for more established companies or high-growth potential companies.
Right, so PE and VC firms have become crucial funding sources.
Oh, absolutely.
For those businesses that are looking to, really scale, expand, drive innovation.
Yeah, they're key.
So how are they different?
So private equity firms, they usually make larger investments in companies that are already established and often profitable.
Okay.
They often take a big ownership stake.
Right, in the company.
Yeah.
So they're not just giving money.
No, they're not passive.
They're getting involved.
They would bring expertise.
Right.
Strategic guidance.
Okay, so it's more hands-on.
Yeah, they're involved.
And venture capital.
Yeah. Venture capital is more focused on early stage ventures.
Okay.
With really high growth potential.
Right.
They invest in exchange for equity.
Okay.
And they also bring expertise and connections.
Right.
So both PE and VC bring more than just money.
It's like a partnership.
Yeah, it's a partnership.
Right.
Yeah. And the guide points out there's been way more interest from both PE and VC.
Makes sense.
In recent years.
Right. As the industry matures.
As it matures, yeah.
Becomes a little less like Wild West.
Exactly. And the potential is becoming clearer.
Yeah, the long-term potential?
The long-term potential, that's what they're seeing.
But what are these firms actually looking for?
Good question.
What do they want to see when they're considering making an investment?
They want a solid business model.
Okay.
With a clear path to profitability.
Right, not just hype?
Not just hype, yeah.
Real numbers.
They want to see a real understanding of the market.
Right.
A capable management team.
With experience.
All right.
And really crucially, a solid understanding of the regulations.
Right, that compliance piece.
Yeah, that's huge.
So it's not just about the idea.
No.
It's about, the whole package.
The whole package, yeah.
Okay, so what about those smaller, earlier stage investments?
Yeah, that's where angel investors come in.
Angel investors.
Yeah.
The guide talks about them.
Yeah, they can be really important for helping a startup get off the ground.
Right, so who are these angel investors?
So they're typically wealthy individuals who either have a personal interest in cannabis or see the potential for big returns.
Right.
And they're willing to take on more risk.
Okay, because it's a riskier investment.
It's a riskier investment, yeah.
Yeah.
But they often bring more than just money.
Right.
Like we talked about with PE and VC.
Yeah.
They can bring connections, mentorship.
Their own expertise.
Yeah, their expertise from their own businesses.
Which can be huge. Yeah, especially for new entrepreneurs navigating this world.
So what's the trade-off for the entrepreneur?
Yeah, there's always a trade-off.
Right.
Yeah, and the guide points out that angel investments almost always involve giving up equity.
Okay, so ownership in the company.
Ownership in the company, yeah.
For that cash infusion.
Right.
So the entrepreneur needs to...
They need to negotiate carefully.
Yeah.
Understand the implications.
Of giving up that ownership.
Yeah, because it's long-term.
Yeah, for sure.
So if you're an entrepreneur, how do you even find these angel investors?
Yeah, good question.
First step, have a great business plan.
Okay, so be prepared.
Prepare, yeah. Network in the industry.
Okay.
Go to conferences. And there are online platforms that connect entrepreneurs with investors.
Oh, interesting.
Yeah, so there are resources out there.
Okay, so moving on to another, really fascinating alternative.
Yeah.
The guide talks about crowdfunding.
Crowdfunding's interesting. It's become more popular lately.
Especially for startups.
Yeah, startups that are having trouble getting traditional financing.
Right.
Crowdfunding lets you raise money directly from a lot of people, usually through online platforms.
So it's like going directly to the people.
It is. It democratizes investing.
Yeah, I like that.
Yeah.
And there are different types of crowdfunding, right?
Yeah, there are a few different types.
The guide mentions that.
Yeah, there's equity crowdfunding.
Okay.
Where you're selling small ownership stakes to a lot of people.
Right.
There's rewards-based crowdfunding where people give money in exchange for a future product. Or a service.
Okay.
Then there's debt crowdfunding, where you're borrowing money from a lot of people.
Okay.
And you have to repay with interest.
Right.
And then there's donation-based crowdfunding, but that's less common for cannabis businesses.
Right, because they're for profit.
Exactly.
Yeah. Now, I know a lot of the big crowdfunding platforms have restrictions on cannabis businesses.
They do.
Does the guide talk about that?
Yeah, it does.
Okay.
It says that a lot of the mainstream platforms
Yeah.
don't allow cannabis businesses because of the federal prohibition.
Makes sense.
So that's led to cannabis-specific platforms.
Wow. Interesting.
Yeah, like Fundana, Cannafunder, Mainvest.
Okay.
They understand the cannabis industry better.
Yeah, they know the landscape.
They know the legal issues, the operational stuff.
So what are the benefits of crowdfunding?
Well, besides getting money, it can validate your business idea.
Yeah.
See if people are interested in what you're doing.
Okay.
And it can build a community.
Oh, like a fan base almost?
Yeah, like early supporters.
Interesting.
But the guide also says
Yeah.
you need a good story,
Okay.
a good campaign.
Right, not just throw it up there.
No, you got to make it engaging.
Yeah.
Offer good rewards.
Okay.
And you have to follow all the securities laws.
Right, it's all the legal stuff. Yeah, that's important.
Okay, so the guide also highlights cannabis-specific lenders.
Yeah, these are interesting.
Tell me more about those.
So these lenders have emerged to address the financing gap in the cannabis industry.
Right, because the traditional ones aren't there.
Exactly, and they offer tailored solutions.
Oh, okay.
Because they understand the challenges.
Right, the unique challenges.
Yeah.
Of the industry.
Exactly.
They're not just trying to, like, shoehorn cannabis into a traditional model.
No, they get it.
Right.
Yeah, they get it.
They understand it.
They understand the revenue cycles.
Right.
The regulations.
Yeah.
They know how it all works.
So what kind of products do they offer?
They offer term loans.
Okay.
Lines of credit. Equipment financing.
Yeah.
Things that cannabis businesses need.
Right, that are tailored to them.
Exactly. And they have deep industry knowledge and a higher risk tolerance.
Because it is a riskier industry.
It is, yeah.
Yeah. They understand the seasonality of cultivation.
Right.
The cash-intensive nature of dispensaries.
Yeah.
The whole supply chain.
So they can structure those loans and repayments.
Yeah. In a way that makes sense
Right.
for cannabis businesses.
Yeah.
They take into account things a traditional lender might not.
Right.
But the guide does say
Yeah.
that it might come with higher interest rates and fees.
Right. Because of the risk.
Yeah, the risk and the limited competition.
Okay, so trade-off again.
Yeah, accessibility versus cost.
The guide also talks about real estate financing
Yeah.
and sale-leaseback arrangements.
Interesting stuff.
Yeah.
So these let cannabis businesses leverage their property to get capital.
So use the value of the property.
Exactly.
Yeah.
Traditional real estate financing is basically getting a loan, using the property as collateral.
Right.
But a lot of traditional lenders are hesitant.
Yeah, because of the federal thing again.
Exactly.
Right.
So specialized lenders are key here.
Yeah. Okay, they understand the industry.
They do.
And sale-leaseback, that's where the business actually sells their property.
They sell it, yeah.
And then leases it back.
Yeah, to an investor or a REIT.
REIT. Right.
Yeah, a real estate investment trust.
Okay, and that gives them that immediate cash.
Exactly, immediate cash.
But they still get to operate there.
They still control the property.
Interesting.
Yeah, it can be good for companies and states with limited licenses.
Right.
Because they can make money from that valuable license.
Right, by selling the property.
Exactly.
But there are downsides, right?
Yeah, the guide says to watch out for the lease terms.
Okay.
Like how long it is, if the rent can go up.
Right.
What happens when the lease is over?
And you don't own it anymore.
Yeah, you're giving up ownership.
And that potential appreciation.
Exactly. Yeah.
So what about equipment?
Ah, equipment.
You need all that equipment.
Yeah, lots of equipment.
The guide mentions equipment leasing.
Yeah, that's becoming more and more common.
So tell me about that.
It lets businesses get the equipment they need without paying a huge amount up front.
Right.
Leasing companies are often more willing to work with cannabis businesses.
Interesting.
Yeah, because the equipment is the collateral.
Okay, so it's less risky for them.
It's less risky, yeah.
And are there other benefits?
Yeah, the guide mentions potential tax benefits.
Okay.
Lease payments can be deductible.
Okay.
But the guide also says
Yeah.
to check the lease terms carefully.
Right.
How long is the lease? How much are the payments?
Yeah.
Can you buy the equipment at the end?
So read the fine print.
Absolutely.
Okay. And finally, the guide talks about merchant cash advances.
MCAs?
Yeah, MCAs. These seem like more of a short-term solution.
Yeah, for quick cash.
When you need money now.
Exactly.
Yeah,
so
yeah.
it's a lump sum of money
Okay.
given to the business
Yeah.
in exchange for a percentage of future sales.
Oh, interesting.
Yeah.
So you're basically paying back with your sale.
Exactly. And it's faster approval than a bank loan.
Right.
And they look at sales history and cash flow.
More than traditional creditworthiness.
Yeah. It's different.
So it could be a